Hi, everybody. Welcome today to today's special episode of the Purposeful Project podcast. I'm really honored to have Yat Siu, the founder of many companies, actually. He's based in Hong Kong. He's joining us today. He's built a unicorn. That's a company, for those that don't know, worth over $1 billion. And not only is it an incredibly valuable company, what I think he's built is also quite revolutionary. And he's going to share with us how he did it. He's going to teach us some of his insights into business. I've had the honor of having Yat on this podcast show before, so I know how much knowledge he's got. And so without further ado, I'll bring Yat up. Yat, hi, how are you?
Hi, great. It's always a pleasure to be here with you.
It's awesome to have you back on the podcast, and I'm excited to learn from you today. So I think we could kick off maybe. For those that don't know you, perhaps didn't listen to the previous podcast, haven't heard of Hong Kong, or perhaps tell us a little bit about who you are, what you're doing, and why you're in Hong Kong.
Well, I mean, sort of my main occupation at the moment is I'm sort of chairman and co-founder of Animoca Brands, which is a business very much involved in sort of the center of everything that's happening on digital rights and non-fungible tokens. But, I've been in the tech space since the 80s. My first job was actually with Atari. We don't have to go through the history. I think your previous podcast may have covered that quite well. But, I've basically been at the early days of technology. My first computer were the Texas Instruments. Then I moved on to the Commodore and then the Atari ST, which is where I sort of found my early, tech career. And then when I came to Hong Kong in '93, I built one of Hong Kong's first internet service providers called Hong Kong Online. And then later on, I built Outblaze, which was kind of a first version of cloud computing services, which is kind of when we met, right? And so through all of this journey, I guess it's an experience and knowledge that I guess you just pick up as you sort of just live through these experiences, which I think ultimately culminated in the building of what I have built most recently with Animoca Brands. But yeah, I've been at the intersection of tech and really tech culture, I would say. I'm building it out of Hong Kong mostly for the better part of the last 30 odd years.
So tell us a little bit about your company today, Animoca Brands. Tell us how it all started, like day one. What was the thinking? How did it come about? If people want to learn how to build a company like this, what did you do?
Well, I mean, first of all, there is no secret recipe in terms of how to sort of build a company of scale. I think sometimes you just stumble into it. Sometimes you find it and you go through a journey and having determination. One of the main things that we always wanted to do with every business we built, and mind you, we don't always get there, right? I've built many businesses. Some have done much better than others. Some haven't worked out at all, right? And I think the key thing, though, is every time we build a business, we want to build a business that has sort of impact and purpose, right? And I mentioned that in your earlier podcast, right? Try to build something that will have some lasting effect, because if not, then at least from our perspective, it's what's the point, right? Because we want to enact some change that we think will be positive. So in the early days, even when we built Outblaze, everyone was relying on our email services, and even though it was really tough, right? And I think this is the part where I think it's important is if a business is going through difficult times, and you're building for purpose that is larger than yourself, then tough times don't feel so tough, because you're building for something more meaningful than just the next day or maybe the next paycheck, right? And you're willing to sort of push the envelope. But if you're building just sort of, you're not quite sure why you're building it, you're making money or it looks like it's really profitable, then profits are typically not the first thing you make when you build a business. Then it's really hard to sort of do that, right? And I think this is kind of the intersection of with the email business. We came to realize that this is the beginning of the .com bust, actually, but we had so many people who relied on our email services, and we saw the numbers grow, and people were still sending more emails to each other and making relationships and building businesses on top of our platforms. We realized that we were offering something really important. This was in 1998, right? I think the world internet population was maybe in the 100 million range or less. I don't know what it was. It was very small, though. And we saw that, and we said, we can't quit now. We can't stop. This is something much more important here. And I think this sort of what drove it forward. And, we slogged through until 2008, 2009, when IBM bought that business and opened up the first cloud computing lab here in this part of the world. So anyway, going back to Animoca Brands, we started originally in 2014 with a different vision, actually, right? In 2014, when we spun out Animoca from a gaming business, which was called Animoca, just to confuse everyone a little bit more, was a business focused around brands And the idea was originally to sort of bring, we saw a trend where children were getting more connected. And so one of the things that I had an interest in at the time also was, children education. We built the Dalton lab and that type of area, and sort of, using mobile apps and technology and brands and bringing it all together. So the purpose really started off with a very different direction around sort of children and sort of children and technology and using brands to leverage that, and maybe eventually go to education. I then actually went off and sort of focused much more on sort of the educational side. And the business was running sort of at the time with other management. And so as it so happened to be, things went kind of wrong. And in 2017, I came back pretty much to help the business, because at that point, the company wasn't worth a lot. It was listed on the Australian Stock Exchange, really, really struggling. One of the main reasons why it struggled was, in the beginning it was doing well, but the App Store had completely sort of de-emphasized anything related to children, and it related to COPPA, because what happened was that sort of the Children Online Privacy Protection Act in the US decided that apps were not necessarily good things, and they basically started penalizing everyone that was doing stuff in the area, even if they were educational focused. And we were dependent on the platform, which was Apple mostly and Google. And in the beginning, they were telling everyone, build apps for families and children, and a big family section. And then when COPPA said, hey, this is going to be a problem, Apple actually completely de-emphasized family. And today, when you try to look for the kids section in the App Store, you have to go several levels deep. And you have a strong background in sort of technology marketing, and you know what that means for discovery. Basically, your business was toast. And so it just basically gradually declined because Apple decided to defocus on the children and kids emphasis, as to not sort of attract the sort of potential regulatory issues that sort of children-focused, gaming, entertainment may bring, right? And so that was the net outcome effect. And I came back in, restructured the business, and I ended up as I was really looking at sort of what to do with the business, I had made actually originally a personal investment in a company in Vancouver that was ultimately involved in building this little thing called CryptoKitties. And we made a decision at the time that, actually this company, what this business is doing, that's the future. And we saw something greater, like the purpose that was very, very important. The light bulb went off, and decided that we're going to put this into Animoca Brands as a platform because it owned the brands, and also that we thought it was the right thing to do. And so I basically sort of took the reins of that business and sort of grew with an emphasis on non-fungible tokens, sort of from really late 2017 up until today, and continuing. And we think we're still very early in that journey. And so that's how that started. So the lesson really is, it was really serendipity, circumstance, right? And the desire to do something important and good, but not necessarily knowing what that was in the beginning, because it was sort of but I think, if I reflect back, if our gaming business was doing quite well, right, and things were growing, then maybe the whole opportunity around non-fungible tokens would come much later to us, because we didn't need to change, right, which is the classic sort of incumbent struggle. So I think it's a bit of everything, right? But when we saw non-fungible tokens, we really saw, wait, this is going to be so meaningful in so many ways.
So for those listening, I mean, if you haven't heard of NFTs at this point, I don't know where you're living exactly, but everyone's probably heard of it. But I certainly feel like in 2017, I hadn't heard of it personally. I mean, I feel like it's in the last 12 months, it's become, I think every other sentence has blockchain or NFT in it. But you're ahead of your time yet again, Yat, which is just typical of how you operate. But tell me, how did you know that was the future? What made you realize that? Was there an aha moment? What exactly was it that made you realize? I think I'm only realizing it now, is kind of what I'm saying. So how did you realize it back in 2017?
Well, I think the realization came when we really saw CryptoKitties, which is one of the sort of elements where I think many of us in the NFT space sort of saw the light bulb moment when we saw CryptoKitties. And what CryptoKitties was really, in and of itself, wasn't necessarily spectacular, right? It was essentially sort of the breeding of digital cats that make more cats, right? So from the outside, it's like, well, it's digital Beanie Babies. What's so great about that? And that's obviously sort of the surface, and you could trade them and all that kind of stuff. But the part that was really fascinating was that, one, the game company, or in this case, Axiom Zen, later to become Dapper Labs, which we were fortunate to be one of the early shareholders, they don't have any ownership of these assets. In fact, once they sold them, the assets were owned by the players or the users, and they were in control of the supply and demand because they were the ones breeding those cats. And so the consequence was that was the first consequence, which was that actually the studio behind it has essentially given sort of control over the supply to the players. So that was kind of an interesting element there and created a dynamic of community, right? So that's the first one. But the second one was the aspect of non-fungible token is it introduced digital scarcity. And so digital scarcity is a big problem because we don't have that, right? I mean, Web 1, Web 2 was the opposite of scarcity. It was abundance. It was making everything the same and copyable. And that's why we had this incredible distribution of knowledge. But it also cheapened that knowledge. It cheapened the value of content to the point where nobody could make money from content anymore. You know, like nobody on Spotify, for instance, could make money making incredible content. They had to make concerts or they had to do endorsements. And making content was simply a promotional thing for, you know, other things, which was kind of ridiculous, right? And that happened because of the fact that you didn't have ownership of that. And non-fungible tokens actually introduced that element of scarcity. And because every single cat that was bred was unique in its own way. And so we then looked at it deeper, right? We didn't just say, hey, this is really interesting, digital scarcity. We said, well, what if you took that aspect and brought it into the rest of the virtual world? And in gaming, what would happen if you took that technology and moved it into another space that people were in? And sort of, we were from the gaming space, so the connection was very obvious for us at the time. So it was very obvious for us to see that actually when you introduce actual digital scarcity, what are the new meta concepts that come into play? And the very first attraction point was, well, you could trade them, right? And so there's an economic reason. But the other thing that was important, and this became more evolved over time as we began to understand it better, because again, when we saw it, we were fascinated. But I would say, you know, my level of sort of understanding and my level of sort of passion in this has grown over time because I sort of get to know it better, right? I sort of philosophize about it more. I get sort of more involved. I drink more of my own Kool-Aid, whatever you want to call it, right? I get so deep into it that I'm sort of now seeing things that I didn't see 3 years ago, right? It's just the beginning of that journey. And where we saw that was that scarcity could be manufactured, which was the initial aspect of here's a rare item and it could be worth a lot and we'll never make more, and on the blockchain it validates it, right? But the second part is you could have manufactured, that sort of non-manufactured scarcity that we as our users, as the owner of these assets create. And we came to realize that actually the way we have relationships in the physical world is actually non-fungible in nature, right? You know, if you buy a pair of shoes, you know, you have a relationship with that shoe. You know, it's special because you were running with it, you went to certain places, and maybe it's not valuable, but it has a particular relationship only to you. Or when you buy a wedding ring, for instance, that wedding ring isn't particularly precious, you know, because of the silver that it's made, but it has a very special memory, a very sentimental attachment to you. And that's something, you know, we always do as humans because we're not robots, right? We have feelings and emotions and sentiments. You know, it's aspects of culture. And that is something in the digital world we never had before. And so we started saying, well, what if I could keep my virtual sword forever? And every memory that I did, every raid that I completed, every friendship that I made while I played these games. And that's kind of really when the penny dropped and we said, wait, right? This is amazing. This could be something really big. And so that's when we decided we're going to go all in. And sort of in early 2018, you know, since early 2018, you know, we made over 50 investments in the NFT space. We built some of the larger NFT sort of companies in the space at the moment. But it was a lonely field, right? We were one of the few that saw it, and everyone else really didn't for the time being. But now it's come to a point where there's so many new projects doing NFTs. I don't even know what's going on anymore in terms of the new projects. But there was a time where we knew every project that was taking place.
Yeah, I'm going to put myself in the category of maybe some of my listeners. And initially, I didn't get it. I felt like it was potentially, you know, the word Ponzi was thrown around, you know, like somehow it's not real. How can it be worth this? But over time, you know, I've also come to like be a believer, and you start to realize just the huge scale potential of this. But I wonder, you know, with the what actually happened with the crypto kitties, for example, what was the end conclusion of that? Is it
still there? Yeah, and the whole point, yes, and the whole point is it's maybe not as popular as it was 3 years ago, but it's still there. And here's the point: it's there forever because it's on the blockchain, and you can own these assets forever. And whether you think they're valuable or not is a different thing. And I think the other thing to think about is our relationship with non-fungible tokens don't need to be valuable ones. You don't have to think of NFTs as something that must be worth millions of dollars. That's what catches the headline, of course, right? But it's like saying everything in the world has to be a Mona Lisa. Who said that, right? Most of our relationships that we have are with our objects and assets are, not valuable in terms of dollar sense, but valuable to us emotionally and sentimental wise, right? So, I keep my CryptoKitties as a memento, for instance, right? And other people trade them because they want to have a collection. They want to complete their series of CryptoKitties and put stuff together. Baseball cards, football cards, whatever you want to call it, there's a collector mentality that exists there as well. But I think the broader meta where we think this becomes so important is that we think, and the reason we're addressing it from gaming, is that it is really the beginning of a property rights movement. So, this is the Purposeful project, right? And the purpose here, what is the great purpose here? And the great purpose here is that we want to basically give digital property back to the hands of those who ought to own it, which is every digital netizen in the world, right? You ought to own your digital property. You ought to own your digital life, but you don't own anything. You exist on the platform, right? I mean, if you broadcast on Twitter, on Instagram or TikTok, what if TikTok says, I don't like you? You're toast, right? And what rules do you have? Is there a judiciary? Is there a legal system? Is there some kind of appeals approach? Actually, there's nothing, right? If you get banned, you're banned, and and unless you know someone, you're out of luck, right? And that's the digital world today, right? And the reason why blockchain as a technology becomes so valuable is it becomes a judicial layer because it's not owned by anyone. That asset ownership is now validated in a system that is owned by many, actually by millions, in which nobody can alter that. That's why when I send you a Bitcoin, it is a real Bitcoin. Value aside, I know I own that Bitcoin. And no Facebook and no Amazon or even government can say, I want to take that away from you, right? That is truly yours. And that property right is the foundation of all rights, right? In terms of when you think of us as a sort of people, as a community, right? If we don't have property rights, then what does democracy mean? What does Bill of Rights mean? What does human rights mean? Nothing, right? If I can't own my basic property, right? And that's what's missing in the digital world. And so as we evolved in that space and realized, actually, this is not just about gaming and NFTs and making gamers more money or making more sort of opportunity. This is about sort of redrawing where the web ought to have gone with Web3 and basically creating a sort of true digital equity through NFTs.
So getting a few questions in from people listening. I mean, I guess you're such an expert on this. I think some people might be scared to ask a question because it might sound stupid. But I think just asking some stupid questions, feel free, everybody. No problem. I'm also learning, so that's why Yat's here to help us. But how do the pricings of things like NFTs get set? I mean, I know you could. I guess it's market demand, right? Is it that simple?
Yes, it is market demand, right? And you can sort of, when you think of it from the context, most famous NFTs are because of art, because art is one of those things that is sort of intangible, right? Or why is it special? Why is it rare? Why is it valuable? And at the end of the day, like with any auction, you only need two to determine the price. Two people who want it, they'll make a price, right? And that's effectively what happened with Beeple. You had two whales that wanted that value, and for them, the amount of money was maybe not that much. And you could say, well, that seems outrageous, but then, why is a Picasso worth what it is? Is it actually really worth that much? It is worth that much to some people, but it's probably not worth that much to most of the world because they can't afford it or they think it's ridiculous. So it's the same sense. But the majority of NFTs, we think, are going to be the ones that have utility, the ones that are used inside a game, the ones that are used in platforms. NFTs can also be used as contracts, right, where you basically sort of determine sort of what's inside a contract. It can be used as keys to unlock assets. Right? It's in effect a token that has rules in it, right? And that's basically what NFTs really mean. But one of the things here you should imagine, like with our virtual cars with F1 Delta Time, when you sort of race the cars, people are owning this property so they can rent them out or they can sell them to others or they can use them. They're making real yield. So there's a calculable return, right? In the same way that when you're buying a taxi medallion, you have a calculable return of someone who drives that taxi. Whether it's a good return or bad return, that is the market demand aspect. And that is how, for instance, in our game F1 Delta Time, the assets are calculated. They're not calculated in most cases because they are valuable art assets. Some are because they're unique. Like when Metakovan bought the 111, he paid an incredible price because he wanted the first one, because he wanted a piece of history, right? So you have kind of that. It's like maybe the first edition Tesla, as Tubado put it. However, for most of the players, it's just, well, what is my return when I play the car? When I go racing, do I earn $10,000, $20,000, $5,000? And we have players in our game who are making $30,000 a month playing, right? And so that means from an investment standpoint, well, if I'm spending hundreds of thousands of dollars on my assets, it may not seem like such a bad investment anymore because I have a very measurable return, right? So there's a logical conclusion to this. So non-fungible tokens aren't just sort of, pretty JPEGs, as some of the critics would put out. There's real utility in them.
Yeah, I think, like you said earlier, I think the headlines sometimes confuse people. So, for example, when you read that Jack Dorsey's first ever tweet gets sold for millions, I think people just can't understand why that would be that valuable, right? It's not really utility, is it, in that case?
Well, it isn't. But the thing is, then you're buying really an expensive autograph, right? And again, sort of, if you get sort of the very first autograph of Mick Jagger or Michael Jackson, what is that worth, right? Why is Honus Wagner sort of baseball card worth, I think, $3.7 million? I don't know, right? But it was worth something to someone, right? And art is one of these interesting things, or autographs or collections, one of the interesting things, because it's not only about, I get to own this thing and it's special. You're really buying into a community. You're kind of buying into the membership of that, right? Which is the same thing with art. When you're buying a Picasso, are you buying just the one Picasso? No, you're a club of Picasso owners now. That in itself has some kind of status. It's not just because I own a Picasso and I love the oil canvas that's on it or something. That could be part of it, but you're part of that club. Our relationship with brands isn't one that is based on pure value calculation. Our brand relationships that we have, that we love, comes with the association that the brand delivers. Why do I prefer Adidas to Puma to Nike to Asics? They're all shoes, and honestly speaking, when you think of the pure utility, they run pretty well. All of them are pretty good shoes, right? However, some swear on Nike and some swear on Asics. Why? Because of what the brand identifies. So when I buy an Asics shoe versus a Nike shoe, I'm choosing to be part of a community. Our relationships with our clothing, for instance, is a great example of that. Why is Gucci worth as much as they are? Honestly, the fabric is probably not worth that much. I personally like my, like Bossinis and Giordano's, right? But people buy Gucci because it says something about who they are, and they're part of the membership of something, and that's value, right? Value isn't just the pure tangible. It's something that's valuable in terms of money. It's who I want to be with. It's what I want to be associated with, and that's the power of non-fungible tokens.
I think that the relationship and the emotion that you're talking about there is actually an undertapped element of what brand is. I mean, that brand is just an emotional attachment in general. That's original thinking, isn't it? I just interviewed the founder of Reebok. He's the shoe company. He's 80. I think he's 82 now, and he was just talking about the emotion he has every time he sees someone wearing a Reebok shoe, and we were talking about whether or not in the future people will own digital shoes. Whether that will be on their avatar, for example, because that plays another part, doesn't it? I mean, there is a digital universe. You have a digital profile. That's what's going to play a part, right?
Absolutely. Yeah, and they're all moving into that space. I mean, Nike is doing it now. Other shoe companies are definitely looking at sort of launching digital fashion wear, because again, it's just attaching themselves into the metaverse.
Now, I know you're very passionate about education, and I know you do a lot of work in this space. So how is NFT going to play out in the education space exactly?
Well, a lot of ways, right? So first of all, we think non-fungible tokens is going to be everywhere, right? So let's just step back and say, well, what is the future going to look like with non-fungible tokens? And then we can talk about why education on this is so important. First of all, we need to reclaim our digital lives. One of the reasons why we don't value our digital lives the same way we do our physical ones is because we don't understand how to value it. And that's the issue right now. That, what's one of the important things in digital life is your privacy and your data ownership. And intellectually, we all say that's important, right? If someone says, is your privacy important? Why, of course it is. Then why are you using WhatsApp? And why are you using Facebook still, right? Well, clearly it's not that important for you, because if it was, you would be abandoning these platforms, the ones that promise you true privacy and ownership of your data. But yet we still do that. Why? Because we don't know how to value it, because we don't respect that in the end. And that's the problem, because when I get my data, I can't do anything with it. But if I give it to Facebook, they mine it and they create all the information and create the networks of that information, and that network intelligence they then sell, ironically, back to you, right? This idea that the retargeting is, in one hand, you could say genius from Facebook standpoint, because they're reselling what was really yours back to you, right, for a so-called discount price. But the other way to look at it is actually, I don't know, is it highway robbery? It's kind of the equivalent of, back when the British were basically sort of buying the cloth from India, producing it in India, in the UK, and then selling it back to the Indians, to people in India at a premium, right? That was the whole economy. It's completely exploitative. That is our relationship with the platforms. Now, why is NFTs important? It's because NFTs give us this idea that digital property is actually worth something. Now, whether it's worth $100, $1,000, or $10,000, the value aspect isn't as important. But you know what? If you own a digital asset in a game or a sword or anywhere, like a virtual land, like in our sandbox game, those lands are selling for $500,000, and they have real value and real utility. Well, actually, it's worth fighting for now, right? My digital ownership of this land is now valuable. Imagine if you bought a real estate in London, and then the government went back and said, actually, we're going to change land reform. Sorry, none of you own anything. You'll fight for it. It's worth fighting for that. And how and what is the mechanism of fighting for it? Well, you need democracy, you need rights, right? You need accountability and governance that will protect your rights. And that is essentially the basis of it. But if you don't own property, if you don't own sort of the base worth protecting, then democracy may be meaningless. Why should I even bother? Because it doesn't matter whether I own, whether I fight for it, because I have no value from it. And so why gaming becomes the tip of the spear is because we already exist in the gaming world with all of those virtual assets, right? We're already paying all this money. We think we own it, but in fact we don't. And so starting from that base, we can educate, billions of people who are playing games who already have a relationship with virtual assets that is one of ownership, and tell them that's not real ownership. In fact, it's rental. But imagine if you had real ownership, what would it mean? And that's it. It's the idea, right? I mean, things like property rights and freedom and human rights are actually ideas, right? And they mushroom into something greater because you realize, wait, that is such an important thing. It's worth fighting for. Because the meta after that is when we think owning our virtual property is worth fighting for, then we'll fight for data privacy. Then we'll fight for things that are important for digital lives. Then we want our digital data, and we won't give it to Facebook, or we won't give it to the platforms unless we get what's right for us, right? So that's the thing. So why does education play into this? Because education is the area where we have to start telling younger generations who are already in there what that means. The other thing is when you have ownership of these assets, right? Our children are all playing games, and all of them who are playing games are already having a relationship with virtual assets in some way. What they're really learning at a young age is about money, it's about value, is about property rights. And what better way to teach sort of our children about what's important than doing it at a young age? Because we don't teach that at school, right? We don't teach our children about economic systems, about value, in terms of, by the time, that's why when they go to college, they get fleeced by banks and by credit card companies, pay high interest rates, because they don't know any better, right? Why should our children not go to college and already have a portfolio, or know how to balance their books, or actually have investment income, right? Capital is one of the biggest problems, one of the biggest inequity issues in the world, because the people don't have it, right? Labor isn't worth that much anymore because of the fact that of AI and everything. That's all sort of making labor cheaper and cheaper and less valuable. But capital is what you need, and there's a whole new layer of digital capital that we ought to be owning. That's kind of broadly sort of the promise of Bitcoin at the start, and sort of Ethereum and so on as well, that you can own sort of that digital capital. But the broader context is that actually you need to own everything digitally, and it's really yours, right? And it's taking sort of your personal ownership that is created from your creativity, from your knowledge base, and actually truly owning that value and putting it forward. And that's where education plays in, because when I'm playing these games and learning about value and learning about property rights, by the time I'm older, I know it's valuable and I'll fight for it. And that's perhaps more fundamental than anything else.
I also feel like the creativity generally is still undervalued. I feel like people, if even today, and I've spent a long time in Hong Kong, as you know, but I'm now in London. It's a very artistic city, actually. Lots of creative people here, but it's still very much seen as, they're an artist. They're not making any money, sort of thing. And then, look, he's in finance. He's working in the city. He's making loads of money. Like somehow value is still creativity. So do you think NFTs and the future is going to give creativity finally the value it deserves?
Absolutely. And in fact, I think if anything, it redraws the fact that creativity and individuality is much more respected than it is today. You take a look at a platform like Spotify, wonderful in the sense that it's made music available in broad ways, but terrible for diversity of music. I grew up in Austria. I have an actual classical music education. I can't use it to listen to classical music because I can't find anything because everything is badly organized, because perhaps most of the people who listen to Spotify, or maybe the owners of Spotify, don't particularly care about classical music, and it's de-emphasized, right? And actually, I think a lot of people would appreciate more classical music if there was a proper way of indexing it. And Spotify doesn't do that, and is not going to put money into it because it doesn't make sense for them, because they're trying to appeal to the largest denominator, not to the niche factors that are out there. But actually, if you pull together these niche communities, which is what the original internet was so good at, you can unlock that value, right? Because actually, millions of users in one platform is big enough actually to make a very, very strong, compelling business case. But in the world of platforms today, you can't do that because you'll get crushed by the big guys. And so that hurts creativity. And the other thing is this, and there are several people out there saying, crypto isn't great, NFTs aren't great because sort of it makes it speculative and there's money involved, and artists and creators should only focus on being creative. I say bullshit, right? And the reason why I say bullshit is it's because creators don't understand about money and value that they get taken advantage of every single day, right? They sign contracts essentially where they get abused, right? They get their rights taken away because they don't know how to understand the law, right? And so by saying this convenient excuse, by saying, oh, you shouldn't know about this stuff because you need to focus on being creative, the business person who deals with the money aspect inadvertently, because of the human nature that many people have, will take advantage of you. And what's the best way to defend yourself? It's knowledge, right? And so they need to know this, and NFTs deliver that. And also, now it redraws that scene. If I sell an art that I've made, now it's standard that I, as the original artist, should be getting a cut of every single sale, right? I mean, that completely changes the way that you think about sharing with an artist. But you, as the ultimate buyer of the artist, that satisfies you, because you're like, hey, that's great, because I bought this art and I know that whatever I paid for, a portion goes to the original artist. I feel much happier doing this. The other thing is that the original artist, because it's on blockchain, knows that you bought it. At least he knows your wallet. He's got a connection. He doesn't have to ask Facebook or pay Facebook to get access to his own customer. He knows who that is because it's on chain. And you guys can talk to each other because you have a direct relationship on the distributed ledger, right? So it cuts out the middleman, but it doesn't, and I don't like the word cutting out, because actually it's not fair to say. You need middlemen to help distribute and discover, but it puts them on an equal footing. It essentially makes sure that they don't have that abusive control that they have, because then they end up becoming monopolies, because it's the nature of business. It's the nature of zero-sum thinking. And here, now it sort of foolproofs that, in a sense, where they can still help you with distribution and still maybe even take a cut for sort of having facilitated it, but not taking away all your value, which is what's happening mostly today.
I'm enjoying some of the comments. People are saying this is just amazing, and then one person says this is really hard to understand. This is over my head, and I'm thinking that's why Yat has a $1 billion company, and you do not yet have one, John. You have to. I even myself, I'm learning from Yat. I've been following NFTs for a while and learning, I think, how it works through Yat. And I think that actually making yourself aware of the opportunity can change your life. I was wondering, do you think? I mean, I want to get back to the amazing achievement of the company you've built. I mean, you've built many companies, frankly, that you've done really well. But the fact that you've just raised $88,888,888, which for anyone not in Asia, maybe you don't realize why that number did you raise, but it's a lucky number, 8, right? But I want to get back to that. And just before we go there and I want to talk about how you raised that money, because I think a lot of people could learn from the process. But just before we go there, I just wanted to make sure, I wanted to ask, do you think things like, let's say Facebook, I mean, they must be thinking about this too, right? I mean, are they going to have to disrupt themselves to get into this space? I mean, I know they tried to get into crypto, but that hasn't managed to happen, right? So,
Yes. So, I mean, first of all, you have to understand that all those guys are super smart, right? So there's no question that they're looking at this space, right? We know that. But they have a classic innovator's dilemma, as all companies do. They're making so much money. There's nothing broken about the way Facebook is run as a business. Maybe their ethics or the way they operate their business might be broken, but not the sort of, the structure of the company, which is a for-profit entity. And from a for-profit perspective, you would say, it's working just fine. So why change anything? And that is the innovator's dilemma. They can't change that so easily. unless they disrupt themselves. People say, oh, but Apple disrupted themselves. But people forget that by the time Apple disrupted themselves, they were already almost bankrupt, right?
They had nothing to lose at that point, yeah.
Exactly. So there was nothing to lose, right? But if you're Facebook or if you're EA or whatever, you have a whole bunch to lose, right? So you have to be careful around that. And actually, that's been the history of innovation. And that's the opportunity for companies like ourselves and others in the space to emerge. Because otherwise, if they were always able to disrupt themselves, then there would be no new innovation from you guys, because they would always basically just do it, right? So I think that's a big thing. But they're definitely looking at it. And the way I think of it is that they will be forced to move into it eventually because of necessity, not because they really want to.
I mean, the other side is and that's the funny thing about history, isn't it? People always think, oh, it's too late for me, Google's already there, or it's too late for me, Facebook's already there. And time and time again, these big organizations, Kodak, for example, it's such an old story, but it's still relevant, isn't it? That something will come along. And I think this is it. I think this is the disruption to all the big boys that can't potentially change. And so, as you say, it's a great opportunity for businesses like yours to come in and know what needs to get built and build it from the ground up, as opposed to them that need to kind of convert their old business and try to make it a new business. But why did Facebook have trouble getting its cryptocurrency going? I mean, they tried, right? Scale might be a problem.
In the case of Facebook, Libra, which is the Libra case, it was really trying to sort of just be a cryptocurrency. So it wasn't really trying to do what we're doing or what generally sort of blockchain is doing. It was really, they saw the opportunity, they saw the situation, and I think they said, we need to be a part of that. And frankly, and this is the part that's always dangerous, when you're the largest platform out there and you might be the one that uses your infrastructure ahead, it's actually one way in which you could arguably control the ecosystem, right? If everyone ends up using a blockchain that was built by Facebook or by Amazon or Google, whichever you call it, and suddenly it became the de facto standard, we then actually end up getting sort of back into the platform story, right? And so that's one way to control it. But fortunately, that didn't happen, right? And actually, it was generally sort of halted mostly by Congress, because they were already wary of the awesome power that Facebook had because of its effect on sort of media and fake news and everything else, that they were very worried, well, what happens if the value system and money systems end up being potentially controlled by someone like Facebook? Actually, that would be even worse, because they would arguably have more power than the government. One may argue, except of military, that Facebook already has more influence than the government. Right, so I think that's a matter of national security, and I think they certainly looked at it from that lens. And
aren't they a bit? Hasn't that ship sailed though? I mean, I'm shocked that they had the ability to recognize stopping Facebook on the cryptocurrency was the right move. I think they've already missed the boat though, because it's already influencing elections. It's already been manipulated.
Well, in terms of controlling, what's happened with Facebook and so on, and the influence that online has, I mean, it's a result of that, right? Which is the fact that we can no longer process all this information, and we've come to rely on platforms that are not subject to effectively the rules that we grew up with, because they're private enterprises. So this sort of dystopian idea of, the future is controlled by corporations. Actually, we're here already. It just isn't happening in the physical world. It's in the virtual world where all of this is happening and is influencing the world in physical ways, right? So by the time Libra came about, the wariness of Facebook was already sort of there. If maybe Facebook was building a cryptocurrency 5 or 6 years ago, maybe it wouldn't have been as big of an issue. But it was definitely a big issue when they put that forward. I think the one important thing is, when you're building businesses, and this is ever more important today than it was before, is that this new wave of businesses that are being built is about what's better for the customer, right? And even when you think about Google's early slogan, so I think it was like "Don't do evil" or something, right? It was very much the intention of building a business that was going to, at its heart, be a good company and sort of serve the community that they were serving. And that was the basis of it, right? People don't build businesses thinking that it's going to be something that is going to hurt people, right? Nobody wants to do that. But eventually, when you become a monopoly and we become too large, then you start sort of getting to this area where you want to protect what you have, and suddenly you start getting out of need, protective, build walls around you, becoming not inclusive, right? Excluding people that might be competitors. I mean, how many businesses have been sank because Google didn't like them, or Twitter basically deplatformed them, or Apple said I don't like it. I mean, and how many lives were affected through unilateral decisions that in the physical world, if that happened, the government can go down and say, mate, you can't run that shop here anymore. It's going to shut down.
I think
Right.
these institutions have lost their ability to bite back, haven't they? Because I mean, I feel like in the standard oil times, the oil giant, one company owns it all, then split it up. It's not allowed to be a monopoly anymore. They all went on to be massive companies in their own right. So even breaking them up didn't make any difference. But I don't feel like social is still not regulated, for example, is it? I mean, it's
correct. Yes, I think the original idea behind antitrust was to take care of that, right? But I think antitrust has lost its effect because the pace of innovation and technology is so rapid that you can't, the judicial structure that was meant to protect people was too slow for the pace of innovation that's taking place. And so they can't handle it. So you need a new infrastructure that can keep people accountable. But you need a new system of truth, a new way in which you can be accountable. And that's why broadly, NFTs aside, why the promise of blockchain is so fascinating. Because actually now, through the distributed ledger, you have a form of truth that is immutable, right? Even if you lied, it's there. If you say the truth, it's there. The root is all there. And that's the point about why blockchain becomes powerful, because it scales. People talk about, it's slow to process, but it's still faster than a wire transfer, right? It's still faster than me having to check the records of where it came from. So if I see something on the news and it says CNN said this, how do I know it's true? Actually, I don't. Because I can't tell anymore what's real or not.
Yeah, I think that's a big problem in general. I mean, that's that. And even if it's true, it's their version of the truth. It's not necessarily the absolute truth. Yeah. I mean, I think I could just, I think I just miss sitting with you and debating this stuff, because it's literally a fascinating subject I could talk about forever. And I'm conscious that it's very late for you in Hong Kong. You've had a long day, and I don't want to keep you forever. But I just wanted to pull it back to for my audience to learn, and for those folks listening in Hong Kong to learn, how you raised this amount of money. I mean, I just imagine the pitch. How did you? Was it easy? Was it literally like, hey, listen, NFT to the future, and this is what we're doing, and people went, here's all the money you need, or how did it play out?
So first of all, we actually didn't need to raise that kind of money because the business already at that point was doing quite well. I mean, again, as you said earlier at the start, if you haven't heard of NFTs at that point, then maybe you're hiding under a rock. And our portfolios in general were doing really well, and our business was doing quite strongly. However, people started approaching us. So typically, what happens often on unicorn raises, at least in what I've experienced, is people come to you and say, "Oh, we'd like to raise some money," right? It's funny because at that point it's actually fairly easy because the situation is de-risked. When you look at our cash flow and you look at the situation, actually it's very de-risked. The valuation, some even have said, "Oh, that seems like a really good deal," right? Comparative to sort of Dapper Labs and other portfolios that have raised at higher valuations. So it's all relative, to be frank, right? But sort of how do we get there? I think the important thing is that we built something with conviction, and it wasn't easy, right? And so what people look at this and say, "Oh, you raised $1 billion. On a $1 billion valuation, that's wonderful, it's fantastic." But it was battle scars of time that got us to this moment, right? We didn't just get deplatformed by Apple in earlier days. We got delisted from the Australian Stock Exchange because they didn't like the fact that we were dealing in crypto, and they said, "We don't like that." So 1 year ago, we were delisted from a stock exchange, right? And because they were nervous about the fact that we were dealing in NFTs, and it was tokens, and it was maybe an ICO, and it was weird, and it just wasn't appropriate. So we went through all of these sacrifices, right? And again, if you're building something that you believe is greater than you and that is purposeful, then you will persevere towards that mission. And eventually what happens is those who see, we were also blessed by the fact that we did have not as big an investor group, but investors who supported our mission. And we're grateful to them because they saw our vision and said, this was worth backing. And maybe the moment hasn't yet arrived, but it's worth backing, right? And we want to see this future, so we'll support it. Because you know what? It's not just about money, right? So you want to bring with you investors who don't want, who don't do it just for return. Everyone wants to make a profit, that's okay. But you can make purposeful profit too, right? And the best investors are actually the ones who are mission driven. Not in terms of, oh, I need to invest only in something that does social good, more about, okay, that's a vision worth building out, and I'm there for you for 10, 20 years or whatever until you make that happen. Everyone says that about the best VCs. It's true, right? Or investors, right? They're there to back you all sort of along the way. I think we have a perfect stock exchange example of that. It's called Tesla, right? On the basis of sort of the pure fundamentals of the business. Certainly, 6 months ago, Tesla in and of itself, probably in fundamentals, wouldn't be worth as much, which is why everyone tried to short it, right? But what was the power of
the money? It's been valued more than all the other car companies combined, and it sells a fraction of the amount of cars. It just
correct. So what are you doing when you're buying into Tesla? Is you're not buying into the present. You're buying into the future. You're buying into the future you want to see, whether you agree with that premise or not, right? Mm-hmm. It's the fact that community-powered sort of value is one of those things that actually is underlying all there and used to be exclusively controlled by Wall Street. So 1% decided that was the way value was done because they had exclusive monopoly on this. Mm-hmm. But with sort of broader awareness of financial investing, which is still small, right? And the fact that we got to see all the abuses that happened in the 1% who knew how the systems work, like front running, right? And with Robinhood or with all this stuff that's happening, people going, what? I didn't know that happened. So no wonder the sort of small retail investor never had a chance against institution because they never had the same sort of weapons at their disposal, right? It was the equivalent of they're riding with horses and they've got nuclear weapons and you're supposed to win, right? That was not something that was available to them. And which is why sort of blockchain and crypto started coming in. And now that sort of thinking has come into the stock market. And so you see several companies, like if you look at, for instance, green organic companies that are sort of, selling sort of the future of food, they're not sort of buying into it because they're like, oh, I'm going to make a big profit. Maybe that's a big part of it too, but it's a future I want to see. These guys are doing good things. And it's not about putting in all of my life savings. It's about putting in something, it's a vote in the future with my money. And if I'm right, because I want to see that future built, then I will also make money from that. And that's what's changing, right? Our idea of value isn't only based on that. And that's one of the reasons, by the way, why we raised so 8/8, right? $88,888,888. It's 8/8 because it's meant to be culturally significant. There was one, who shall not be named, but a media outlet that basically said, oh, we can't cover your story because, you didn't raise 100 million at least, right? As if we couldn't have, right? It was like, oh yeah, and there was another headline that says, almost raised $89 million. Obviously you missed the point, right? Which is like, you really think we wouldn't have been able to raise, like the extra money. No, that wasn't the point. They didn't understand it, right? That actually, again, we're raising, some of those who understood it actually said, hey, that was a meme raise, right? It was a cultural raise, right? It was something to signify we did it. Exactly, it was symbolic. I mean, it was a big moment for us.
I as someone that grew up in UK and then spent 20 years of my life in Hong Kong. Before I left for Hong Kong, people said to me, "Oh, Hong Kong was at the time being handed back to the Chinese. It's communism, and you sure you want to live in a communist state?" And then when, of course, living in England, it's like, "Oh, we're democracy, we're free." When I hear all of this, do you know what it actually makes me think? That the blockchain is real democracy.
Yes.
Actually, blockchain can create, like you're talking about there with Wall Street bets and all of that sort of movement, like true gathering of people to own their own data, own their own assets, and not fight back sounds so aggressive, but level the playing field at least. Give you a chance to fight the institutions that have controlled the system, have controlled the closed system for so long. Right. So I think it's really very exciting. And I mean, I know it's also interesting. I don't want anybody listening to miss this kind of point you just mentioned there. I think it's quite critical to the psychology of raising money, which is actually if you go and build a great business and you build a profitable business or a business that you enjoy, then you'll be surprised the money comes to you, right? I mean, I spent quite a bit of my early career chasing money, and it's really hard to, you're pitching all the time to get money. It's actually really hard. The best thing to do is build something where people come to you, right? Which is kind of what you're saying here. You did an experiment. I was reading. You did an experiment where you basically, let me just read it, make sure I get it right. You launched some games, and you had a couple of games, and you sold assets inside those games, right? I'm just trying to look for the article. But that was that a test of your model?
Yes. So this was an interesting one. I think you're talking about the Tower token and Crazy Defense Hero.
Exactly.
Yes. And so and this was sort of the way you have to experiment and do stuff. And what we decided to do is we made an experiment for a game that was actually doing quite well. How do we succeed in creating an inflationary game economy, which is what typically games are, and give ownership of that game to its players through a token mechanism, which would be valued, thereby earnable by the players because they're spending time in the game through play to earn, who can sell that vote to whoever wants to direct the future of that game. So the idea was, how do we create a system where the people who play the game can be rewarded for the ones who want to have a say in the game, right? Essentially democracy, you could say, inside the governance of the future of the game. And the grand experiment was that if we succeed in doing that, the flip side is most people will say, well, I don't care about what goes on in the game. I just want to make some money. So you know what I'm going to do? I'm just going to earn and farm as many tokens as I can as I play the game, and just dump the tokens and take off the profit and just mine it. Kind of like in a classic exploitative sort of gold mining fashion, right? Like how people go in and mine for diamonds, sort of dig a hole as deep as they can, and then move on to the next hole, right? Classic exploitation, right? And that's sort of, the industrial way of thinking. And it could have gone that way, but actually it didn't. Actually, people started buying into the tokens as, I love this game. I want to have a vote in this game. I actually have a way of directing the future of this game. Let me get in, right? And so now, crypto volatility aside, the Tower token has a market cap of something like $300 million US. I mean, it's in some ways you could say that's insane. At one point, it actually touched $1 billion, which was probably sort of at this hype of exuberance. But the point is that even at $300 million value for a game like that, that is more valuable than many of the big game companies out there. And here's a single game that has that value. Why? Because the end users actually want that ownership, and they chose to value that game economy at that size. They said, it's worth it to me, right? And I want to have a vote in how things go. And so I'll buy that token. So people who earn a token, some sold, some didn't. Some ended up buying more because they wanted to be able to direct the future of where that game goes, right? And so, our vision, we're not there yet, right? I mean, much of this is still in development, but our vision is that every one of the games we launch and every one of the metaverses will be fully decentralized. If you look at our tokenomics, it's all around the fact that we end up owning only 20% or less, maybe 15% of whatever goes on. And ultimately, for us to see success, is that the players own everything and they run everything and they can vote for everything, right? That is success. Because then it will truly have a life of its own and will never die. And of course, it's a little bit like nation building. And we're going to sort of have struggles along the way, but that also makes it so incredibly exciting and fun.
Now I know because I've interviewed you before, and I've known you for a long time, so I know that you've worked very hard and diligently, consistently to get where you are today. So I don't take this next statement too lightly. I know how hard you've taken to get here, but what are you going to spend $88,888,888 on?
Well, yeah. So first of all, one of the big things we're gonna outside of sort of expansion, we've been very acquisitory. Like we've bought a lot of companies in the past that we've integrated into basically the Animoca Brands family. And part of the strategy here is that we're buying, we're buying really communities. We're buying virtual metaverses that are basically locked. They're rental economies. So maybe a meta way to say it is we're buying North Korean societies, and we're liberating them and turning them into democracies. And they all generate revenue to play, right?
I mean, that's shut down very soon, by the way.
Yeah. I mean, no. So I mean, the context of this is really that we're basically sort of liberalizing these closed metaverses into open ones, and actually unlocking incredible value that was always there. Right. One of the issues that non-fungible tokens one of the issues that game companies have, or any kind of anything on the internet today, is that everything is permissioned because of the walled garden. So I can't do anything without permission on any digital object. Doesn't matter whether it's your data or something else. Now imagine if that was true in the real world, and I bought a Tesla, and I wanted to paint the car, and I have to seek permission from Tesla to just paint my car. Or if I want to hire a driver and say, oh, I want to hire a driver. Tesla, am I allowed to hire this driver, please? And Tesla will go back and either say no, or they'll say, sure, but you got to pay me 30% every time you use that driver. Right? It's the platform thing, right? That's the digital world right now. But in order to scale it out, you need to have peer-to-peer. And because you own these NFTs, you can now have peer-to-peer relationships with any service provider around the world that was willing to give you service. And today this is already happening. Our NFTs can be mortgaged, they can be loaned, they can be fractionalized. Other people incorporate it in their own games. They do whatever they want because the relationship is one with the owner of the asset, not with the platform, right? And I think this is really, really important in terms of the future where we can have sort of futures ownership. And the fastest way for us to get there is to buy sort of entities that already have these communities and essentially free them by delivering true digital ownership.
Mm. Now, I've been personally playing around with BitClout and these other cryptocurrencies. Now, I know certainly can't get into endorsing anything. That's not what we're doing here on this podcast. None of us are financial experts, but I personally really enjoyed what I think is basically the first time I've ever seen in the BitClout system, almost like social currency. I wouldn't even call it cryptocurrency, where you can almost back or support individuals. It's the first time I've seen it. And do you think things like BitClout are the first of many? Is this the MySpace before Facebook kind of model comes along, or is this just generally going to happen now going forward, investing in individuals?
Yeah, social tokens and fan tokens have been around for a while, in sort of small and big ways. Some of the big ones are sort of NFT related projects like Whale Shark, for instance, is a big one. He's also pretty dominant on BitClout as well. And I think one of the things to think about social tokens and sort of social currency, if you want to call it that way, Roll being a great example of that right now, is the fact that it's what blockchain and crypto does. It can value a community, and actually, if you think about it, every one of us has a community. Even your family is a community. But the value is intangible because you can't really, like if you ask me for a favor, I don't go to you and say, oh, sure, that'll cost you sort of, 5 tokens or $5 or $100 for that favor. We just agree on it because, we're good friends and we help each other out. And so we've already created a value system amongst us. Because what happens if someone asks a favor all the time but never gives one back? You stop basically interacting with them, right? It's the same thing. So the cost is there. The economic substance of that relationship is already there, but we haven't yet fundamentalized that into some kind of value system. Enter social tokens. Social tokens are designed to try to create a way in which you can sort of create a value money. And in the case of BitClout, they create a bonding curve around the value of the tokens. The more people buy it, the more valuable it becomes. In the case of Roll, they're creating one where the founder of the token ends up issuing tokens and sort of has a market demand, essentially almost like a stock exchange of the value of the token. So everyone has a slightly different approach, but the idea is the same, which is that now I can sort of offer reward value or receive value for the relationships that I have, right? And they don't necessarily have to be monetary. Nobody said that owning, like when I bought your BitClout, I'm not expecting to make a profit from it, right? I'm expecting that just to say, hey, I have a relationship with you, and we're friends, and we were doing stuff, potentially together, and that's my way of saying that. I'm never expecting that, I would cash out for a ton of money. That's not why I bought your BitClout. Some people might, but that's so it's the same thing, right? It's like someone sending you a gift, or you go for dinner, or someone brings you a bottle of wine. It's just appreciation, right? And it's a way of putting that together. And that's what social tokens is really all about.
That's what I love about it. I feel like that's been missing from the system. It's so obvious. I mean, I don't want this to make it about an advert for BitClout suddenly, but I am kind of inspired by it. I think I'm inspired by it. I feel like there's quite a lot of negativity, especially now. I guess whenever you're listening to this podcast, it might be today, or it might be a week from now, it might be a year from now. But crypto at this very moment is having a bit of a bad week, and people are all talking about how it's a Ponzi scheme. That's the word everyone loves to use for everything that's having a bad week. It's like every bad leader in the world is Hitler at some point in their career, right? So, but I feel like right now crypto's having a bit of a tough time. But I'm seeing incredible positivity from these things. And I know there's always going to be, every tool can be used for evil, right, if you want it to be, but it's the first time I've seen that spirit, what you've just described there, that like I can actually not just say thank you to someone, which I do all the time, but actually kind of not put my money where my mouth is, but put some of my energy where my mouth is, and support people and without any expectation in return, right? I mean, you're a prolific angel investor as well. You invest in businesses, you take equity. That's fair enough, but there's something nice about just saying, hey, I like you, here's a bit of support. I don't need anything back right now at all. I just want to show some love, and that person lifts up, does well, and maybe at some point karma comes back to you and there's support, right? But that's the first time I've seen that. I mean, normally, like especially in the social environment, like I've got my social media, I'm doing all right. It doesn't matter what anyone else is doing, but when I have a bad day, I have a bad day. When I have a good day, I have a good day. But when someone else has a good day, now I can also have a good day.
That's right. Right.
And that's the first time I've seen it.
Yeah, and that's the power of community-powered, really, that's community-powered, right? If you think, and I think this is where I draw it back to the example of NFTs as well, because in the end of the day, one of the mechanisms of is how do you value an NFT? So why is sandbox land or F1 Delta Time assets valuable today? Well, it's valuable because you're buying into a community, you're buying membership into that community, right? And so that's another way of doing it. I mean, imagine, for all the fashion brands, going back to the brand topic, had sort of social tokens. How many people would want that? Not because they want to cash out, but because they want to be a part of that membership, that family, that association that's associated with that, right? And now you can do that on an individual level with social tokens. And so BitCloud is one example, Roll is one example. And yes, I think it's the makings of a better future. I mean, we were hoping for the better future when the internet first came, and it was like that for probably the first 10 years. And then afterwards, there was too much information. And then the platforms came and said, we'll manage it for you because you can't handle it. And then we actually inadvertently gave the keys to our future to them. So it's time to take it back.
Yeah. Well, I've taken an hour of your time. I love talking to you. I've learned so much in this chat today. I always feel like I'm so happy when good people are doing things that disrupt the world, because that means that new disrupted world will be better. So yeah, thank you for doing what you're doing, and I'm really excited to see what happens next. Just finishing off on a light-hearted note. If you went back and gave some advice to young entrepreneurs starting out today, I mean, a lot of them are being born into this NFT world right now. There's probably been about 50 babies born just while we've been doing this podcast. They're being born into this world. But what do you think if you were starting a business from scratch today? Would it be Animoca Brands, or what would you suggest to people if they were looking to start a business today?
Well, first of all, I think if you look at sort of anything related to Web 3.0, I think we're so early. Right. I mean, people who have crypto is about 70, maybe 80 million people in the world right now. People who have NFTs is less than 1 million. Right. It's tiny. The numbers are big because we went from rental to ownership economics, but it's such an early space. And, I'm not suggesting that people just copy what others are doing. There's many, the beautiful thing about a sort of a new sort of space is creativity can be anything you want it to make. Right. Whether this is NFTs, social tokens, whatever that is, I think Web3, building on decentralized platforms, ultimately, right? It doesn't have to be NFTs, right? That's where I think the future should go, right? Because that's basically, maybe as we sit here, maybe someone's hatching up the next social network that's maybe better than BitCloud as a version of Facebook that gives rights back to users. I mean, we're not building that, someone else should, right? And there's so many things you can do, right? When I think of the energy, when we all thought about sort of what the web will give to us back in the mid-90s, right? That's what we were thinking. Oh, we could do all this amazing stuff. And it looked terrible because dial-up was horrible. Websites looked like crap. It was just like, and everyone, when we showed it to them, they're like, what is this, right? Really? This is the future, right? We're at that point right now, right? So it looks like sort of like line graphics, right? But we're sort of building towards that future. Everything in our life is going to be redrawn on the basis of decentralization, on the basis that we have true digital ownership of everything in our life, right? Which means everything is up for grabs. Everything can change, and you have a part in making that change. So my mind is like I don't think it gets any more exciting than that.
Fascinating, yeah. And I think if you could just you've got to really sit and think about what's possible, and when you do, I think your head explodes. I mean, I did it this morning because I knew I was talking to you. I sat there, I thought to myself, how could this all play out based on what you're doing? And a little bit of my brain did explode. It is just incredible, the potential, isn't it? Well, Yat, again, thank you for sharing your knowledge, and appreciate you so much. Keep doing the great work. I know that that there's a big event going on in Hong Kong at the moment, and you're one of the stars. I know you're a very humble person. You wouldn't like me calling you a star, but you're one of the stars in Hong Kong. Not only have you been supporting startups there, investing in them, helping them, mentoring them. You're now not only you're leading the charge yet again when it comes to a revolution in how the world works. So yeah, thank you for being you. I hope to have you back on the podcast very soon.
It's a pleasure, and thank you so much for having me.
Great to see you.